This week, we'll talk retail prices, consumer sentiment, and dig into those supply and demand numbers. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner, with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
A lot of reports for us to dig into this week. We'll do all of that. We'll also preview what's coming up in next week's big week of reports. But to kick things off, let's recap what happened this week in the markets.
Yeah, if we start on the cattle side this week, fed cattle were down $1.50 this week, Megan. Those feeder cattle auctions, though, were anywhere from $3 to $5 higher this week. On the future side, the October live cattle futures contract was down $3.05, and the September feeder contract was down $2.25 this week. We also saw September corn futures down another 6 3/4 cents on the week. On the beef side, choice box beef was $1.90 higher. So we're seeing some strength on that side. Pretty strong ribs this week in that choice box beef price. On the hog side, barrels and gilts, cash barrels and gilts down $1.90 this week. The October lean hog futures contract was up $1.10. We lost 80 cents on the pork cutout value, and that was really driven by what was lower ham prices this week.
I know when we talked about what happened this week in Missouri sale barns specifically, it was nice to see a little bit of a rebound there after really those barns have seen a lot of pressure as well as we've been seeing just such a big slide on the future side of things.
Yeah, that's right. And as you point out, it's another down week when we look at the future side, yet we got some strength in those feeder cattle prices. I'm kind of curious to watch next week is a choice box beef price that I say average this week, a little more than $3.16. That's $6 above where it was last year. We've talked a lot about consumer demand and maybe a few weeks ago more about the weak side of that consumer demand story. Maybe what we're seeing with stronger choice box beef prices this week will give us some stronger cattle prices as we move forward. It's been an up and down roller coaster if you think about where we've been over the last few weeks.
There's a long way to fall when you're at record prices, right?
And we tend to experience those that fall down seems like it happens awful quickly relative to what sometimes might seem like a slower climb up. And I think you can look at the corn and soybean side of this equation and begin to see much lower prices that we didn't anticipate, perhaps when we were thinking, back in planting time that we would be this low. So it doesn't take much to put a lot of pressure on. And cattle's been in a wonderful place. Drought certainly got us here to these record prices, but it doesn't, if you look back at where we went in 2015, it didn't take long for some correction relative to the drought of 2012 that we had. And I'm not saying we're at the same place in this cattle cycle, but we want to watch what that downside risk looks like.
I would also assume, and we don't have to preach too much, but having some risk management in place, and this is a good reminder why we have that conversation so often.
So let's not forget, prior to 2020, we probably didn't use much LRP in the cattle industry. It has become very commonplace for folks to use LRP today. So it's amazing how quickly that's changed. Risk management, again, I say all the time, singles and doubles, not home runs. If I was good at hitting home runs, perhaps I would take more risk. But for a lot of folks, this is all about long-term business profitability. And so maybe I'm willing to give up some of the very upper end trying to protect the downside. And when you see the kind of tools that we've developed over the last several years, like LRP, it gives us an opportunity to lay off that downside risk without giving up the opportunity for higher market prices if that's what unfolds when we're ready to sell. So much better tools than I think we would have had in the toolbox even 5 years ago. And I think those are the things that producers have to continue to look at as they think about their own operation.
All right, let's talk slaughter numbers for this last week. How are they stacking up in comparison to a week ago?
Yeah, so USDA tells us for the week ending August 17th, a run of 602,000 head of cattle this week. That's up 11,000 from last week, but down 15,000 from where we were a year ago. And on the hog side, a pretty good run of hogs this week, 2.512 million head of hogs. That's up 129,000 head from what we ran last week, Megan, and up 81,000 head from where we were a year ago.
And as we take a look at those year-over-year comparisons, how are those lines going?
Yeah, in different directions, I might say. So cattle slaughter down 4.2%, while hog slaughter is up 1.3% year to date.
All right, so we're going to talk a lot on the consumer side of things. We'll start there. Retail prices, as you take a look at those for the month of July, how does beef look and how is pork looking?
Yeah, on the beef side of the equation, so July 2024 beef retail price, $8.43 a pound. That's a nice increase, 31 cents higher than where it was in June of this year. 3.9% higher than June. In July is where we ended up. So a very strong retail prices. So back to our conversation about where do cattle prices go and how strong is consumer demand. You look at where these retail prices for beef have been, it gives you some hope that perhaps we might talk about some higher cattle prices as we move ahead. So much higher prices in July for beef. On the pork side, we do continue to move higher. The July 2024 pork retail price, $4.92. That's up 4 cents from June, or a little shy of 1% higher than where we were in June. I think most important is looking relative to last year. We're up 4.6% in that pork retail price year over year. So pretty good increase. And as we often talk, your favorite bacon. So bacon prices at $6.88 a pound in July of 2024. That's 10.4% above July of 2023. So bacon's getting more expensive. I know you've already stocked up for the foreseeable future.
That's why the cold storage had bacon so much down. And will it be interesting to see where those numbers are too, and we'll talk kind of preview that coming up in a little bit. I think the big story of the week, I mean, obviously we're talking about prices higher than they were a year ago and a month ago. But the other part of that story is when we're talking about food price inflation. And in that news came out this week, which I think is an interesting tie into this.
Yeah, absolutely. We're now beginning to see this at least cresting of what's been very strong food inflation and getting back to what we might consider, careful about saying this out loud, more normal levels of food inflation. I'd always like to remind us, it's amazing the jump in consumer food prices that we've seen. Really, I go back us up to the start of COVID. And now where we sit, we're not talking about lower prices. We're talking about prices that aren't continuing to go up at the rate that we've seen. So I think that's interesting, but I think the days of the prices that we saw pre-COVID, we never get to see again. And so how do consumers choose to make food purchases in what's a lower inflation environment? I think that's a big part of the story as we go into 2025.
So I think the really cool element of this is looking at the different cuts that are available also, right? Like they might be beef prices or beef purchases are still holding strong, but we're looking at different cuts or finding more value-based cuts. And I think that that's a great testament to what the beef industry has done, what the pork industry has done to highlight really flavorful options that don't require us to trade down on proteins if we're looking at a tighter grocery budget.
For sure. And I always say put in front of consumers what they want, and it'll be a win. And the work that the cattle industry has done for a long time has changed the product we're talking about today immensely. And it's one that consumers continue to find important to their mix of purchases, for many of them at least. And I think, my old story that I tell way too often is, when most consumers want to go out and have a really good meal, what do they go eat? And a lot of them will say steak. That is not by mistake. That is a lot of hard work by I think, the cattle industry to put in front of consumers better products, at least in the consumer's mind. That win is certainly showing up in the kinds of prices that we have, all the way from feeder cattle to beef, and so that it's a testament to the technology that we have in place today that producers are using, that I think just really changes the mix, the trade-off between some of these different meat products.
We have 6-year-old twins, right? So it's always like a mix and match, and like what works and what doesn't in a mealtime. Surprisingly, their favorite thing right now is beef tongue tacos. So I mean, there's another not expensive cut of beef that's getting utilized, at least in the Grebner and Conant household.
For sure. And so you have to, I think that this is the good story of, you do need to look at what are the opportunities, right? What are the different cuts that are available? Sometimes it's going to vary about what you put in that cart or what you decide you're going to have, depending on those relative prices. And the commodity beef, we used to be able to talk about commodity beef, commodity pork. Those days are long gone. Now it's all about the cuts. And sometimes some cuts are going to have stronger demand than other times. So being able to be flexible in those purchasing decisions is a big part of what I think we're going to see as we look ahead.
All right, let's take a look at consumer sentiment data for the month of August. What's going on there?
Yeah, when we look at the preliminary data for August, relative to July, we're up 2.1% in the overall index of consumer sentiment. So not a big change. When you look at it relative to a year ago, we're still down 2.3%. I think what's important out of this, when I look at, so the overall index is made up of the current economic conditions and then consumer expectations. Current economic conditions were down 2.9% July to August, down 19.3% August to August. So it's not been a good current situation. Now, maybe that'll change given some of the data you and I are seeing today when we get the September numbers. But when you look at expectations, they're up 4.8% July to August, up 10.2% year over year. So a lot of expectations driving, I think, that overall August index up 1.4 index points.
How closely are you watching where these are, that expectations index opposed to what's necessarily happening right now, as we try to get a pulse on maybe where things are going, or that indication? Does one outweigh the other?
So I think it depends on the time. So when you look at this overall index, it does move around a lot. And I'll say, I think sometimes it's driven by, as I'm sure the constructors meant, driven by what's happening this week. It is an estimate of the month, but it's very current in terms of its measure. So a lot of volatility. So I don't want to read too much into it, but again, I'll just say that current economic conditions continues to say maybe not so positive, but the expectation side certainly is what's been helping that index grow.
All right, supply and demand numbers out this week. As you take a look at August data, what's jumping out for you?
Yeah, I think we can still talk about changes to the 2024 estimates, even though we're now 8 months into 2024. And that is no knock at USDA when I say that, by the way. Number one, They raised beef production, they raised chicken production. Although they lowered pork production 90 million pounds, the net of all that was an 85 million pound increase in production for 2024 of those three meats. They did come back and lower pork exports 125 million pounds this month. So all of those things, you look at per cap availability across the three meats that we're talking about, it's up 0.3 of a pound. So more supply available this month, according to USDA, than what they were projecting last month. They did raise fed steer prices another $1.25 this month. They raised chicken prices $1.50. So a $1.88 fed steer price annual average is our projection now in August. So those are the 24 changes. For 25, not a lot of big changes. I'll say the biggest on the supply side was they cut pork exports by 250 million pounds in August relative to July. I think that's because of some slower trade here happening in 2024. They did not change the fed cattle price for 2025 yet, still $1.91. So another record level annual average. Perhaps the biggest thing that, you and I have talked about this, but I think it continues to need discussion. Corn prices for 24-25 are currently projected to be 9.7% below 2023-24. And soybean meal prices over that same period down almost 18%. So cheaper feed may help the bottom lines of all of these animal sectors.
Cheaper feed plus a better grass situation. Could we start to see expansion grow a little bit faster than we've been? Well, really, that we haven't seen.
So I think the short answer to that is yes. I'm not ready to say this is just going to be a slow rebuild, unlike what we did last time. I think when we start to rebuild, it'll happen relatively quickly. As you and I watch cattle on feed reports, the percentage of heifers on feed, it could switch really quickly. It did in 2015 when we made the building part happen. So this is the time to be watching that supply side really carefully, as it won't take much news to, again, when you're at record levels, it doesn't take much negative news to what? Move these prices lower. And I think we want to watch the supply side and that rebuild as it could come pretty quickly. And you're right, Megan, we have great weather in many parts of the country that not only will give us, it looks like, a record corn and soybean yield, but very nice hay yields as well.
All right. That's all we have for this week. I say all. We had a pretty robust set of reports to get into. As we look ahead to next week, livestock slaughter, cattle on feed, and cold storage numbers. I can imagine 2 of the 3 things you're going to look at, but what are you monitoring most in next week's reports?
Yeah, so we're going to look at beef cow slaughter, of course. That might be the early indication of building. Cattle on feed, it'll continue to be placements. And maybe at some point, we continue to talk about feed yards being fairly full, which I believe they are. You keep seeing a reduction in placements. That'll eventually catch up with us on overall on feed numbers. Cold storage, for me, gives us a little bit of demand information, and whether we're seeing strength or weakness. But those are the 3 things I'll look at out of those, out of that trifecta of reports next week.
And I know we continually talk about this, but I think it's a good reminder. We're obviously seeing beef cow slaughter slow because we're pulling from a smaller herd or a smaller available. What is that like magic number for you in terms of beef cow slaughter that shows that we're not pulling back because there's less available. We're pulling back because we're retaining.
Yeah, so I often look at beef cow slaughter relative to beginning inventory. If we're below 5%, that's to me kind of the signal of we're building. were holding cows. We decided we could get another calf out of that cow instead of sending her to slaughter. And so I think that's the way I tend to look at it, and will be the signal about whether the cow side of the equation is trying to build versus adding heifers.
Scott, always great to see you. We will have plenty to talk about next Friday.
Sounds good, Megan.
We have our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.